As a person who's looking at international tax, one of the common questions which comes to our mind is how do you harmonize the provision of the Income Tax Act 1961 and the various treaties which India has entered into? In this segment, we are going to see what all interactions could be possible between the Income Tax Act and the tax treaty that India has entered into with various countries, right? So if there is a particular income, okay, which is taxable under the Income Tax Act, but it is not taxable under the treaty, how would the taxation work? If this income is taxable both under the Act and the treaty, how would the taxation work? If it is taxable under the Act, but there is no relevant clause under the treaty, how the taxation would work? If it is taxable under the Act, but the relevant conditions which are there under the treaty are not satisfied, what will be the consequences? So we will learn how do you harmonize the provision which could be available in these two cases. And one more situation which could be there is an income may not be taxable under the Act, but it may be taxable under the treaty, or in some cases maybe the tax rates which are governed under the Income Tax Act are disadvantageous vis-a-vis the treaty. So how do you harmonize all these provisions is something we are going to look at as a part of this particular module.